All right, so we started. Welcome to the final day of the boot camp. Finally, the journey that started on Tuesday is finally coming to an end today. So we started from the very basics of Forex trading on Tuesday. We defined what Forex is. On day one, we went into theoretical aspects. Day one. And then day two, we started our practicals from day two, right? You were introduced to the concept of market structure, day two, support and resistance, and the concept of trends in day two. Day two, we also learned, we also showed ourselves the MT5 platform, that's our trading platform. You learned how to open and close a trade. You got familiar with the trading platform. And day three, which is yesterday, what we did was to form a perspective of the market. And then William, you're welcome. So what we did yesterday was to form a perspective of the market. And you now know exactly where to expect reversals in the market. You know the zones where you should be buying and selling from. And what did we say? We said that in an uptrend, you want to be looking for buys in a support. And at that support, before you take entry, you want to validate that support. After you validate the support, then after your confirmation, you take entry. When price is in a downtrend, you want to sell at resistance. At that resistance, you want to validate the resistance. After validation, then you do your confirmations for entry. But the major goal that I said yesterday was not to show us how to take entry. So we've not talked about entry strategies, entry systems, right? My goal for you this particular bootcamp is to help you, is to give you a very, very good perspective, because that is all that matters. Entry is just 10%, like I would always say, all right? Understanding market structure, getting the right zones that you should trade from, okay, that is a major work, okay? Entry is just a bunch of confirmations to look out for, okay, which anybody can do, right? If you have a good entry strategy, but you get the market structure wrong, you get the zone wrong, your entry is not going to count, right? So market structure is the foundation really for a successful strategy, all right? So, and what I want to admonish us to do is, like I said yesterday, please spend this weekend to back test all of these things, right? You need screen time. You need to spend time on the charts, all right, and try and see how the market is playing along the zones that we talked about, all right? So please, if you were not in yesterday's class, I want to advise that you watch the replay. It's a very, very power-packed session. So watch the replay of yesterday, the replay of Wednesday as well. Day 2 and day 3, very, very important, all right? So we used 2 days to deal with market structure, all right? So please, tonight or tomorrow, before Monday, go to our YouTube channel, watch the replay of day 2 and day 3. And most importantly, you want to practice, right? You want to practice and see how those things align in the market, all right? So that way you get familiar with it and know when to expect it in the future, all right? So today, what we're going to talk about today is very, very simple. Today, I want to talk about risk management and psychology. Okay, we want to talk about risk management and psychology. Tobi Oyeyinka, you're welcome. Okay, so this particular topic is very, very important. Risk management and psychology. Okay, so if you have a very, very good trading strategy, right? You have good entry and everything, but you get your risk management wrong. Babs, okay, you're welcome. All right, risk management is very, very important. It's what will keep you in the game for a long time consistently. All right, you need to know your risk before you enter a trade. You need to know how much you are losing all right, before you place a buy or sell trade. A typical thing that traders do is to only consider profit when taking entry on a trade, right? You're only concerned about how much you make on that trade. You are not concerned about possibly if that trade doesn't go my way, okay, what will happen? So an average trader is using very, very high lot size because they don't understand risk. They are over leveraging their account. All right. I'm going to show you under risk management the right lot size that you should be using on every trade, and then you must do that particular set of activities before you place a trade. We would also talk about something called risk to reward, the concept of risk to reward. Once you harness those two concepts that you learn, you will be in the game consistently. All right, you'll be in the game consistently. You would have longevity in the market. All right, it's very, very easy for anybody to start trading Forex, and under 1 year, okay, they take a break for 6 months, they come back. If you want to be consistent, right, you need to understand risk management and psychology. So please take this class very, very seriously. It's going to define how well and how long you'll be in the market for. All right, good. So let's talk about risk management real quick. And the first thing that I'll talk about risk management is knowing the right lot size to use on every trade. So we'll talk about two major aspects of risk management. The first aspect is knowing the right lot size to use on every trade, or determining the right lot size. Okay, let's just break down how to know the right lot size to use on every trade. Okay, the right lot size to use per trade. Okay, so now check it out. My recommendation for you as a trader is to have two accounts. All right, two separate accounts. So if you're trading with 10 trade, you want to have two MT5 accounts. You want to have an account that you are trading conservatively, right? A conservative account, and then you want to have an aggressive account, right? Conservative and then aggressive. All right, so on your conservative account is like your account where you are not taking very, very high risk, right? You are taking low risk. So that means on an account that is conservative, you are not looking to make huge percentage profits on a monthly basis or per trade, right? You are fine with anywhere from 3% to like 20% profit on a monthly basis. All right. So an account that is conservative, your goal is to grow that capital, steadily, right? Steady growth account. Now, but for an account, for the aggressive accounts, these are accounts whereby you are very, very aggressive with the risk. You are using a very, very high lot size. You are trying to possibly flip your accounts. You're trying to turn your $100 to like $1,000. So an aggressive account is an account that you fund, knowing that you don't mind if you lose all that money. All right, you are ready to go all out. And I'll show you how to do it the right way so that you can be consistent with flipping accounts on your aggressive. Okay, now my recommendation is on the conservative account. Now, why do I say that you should have two different accounts? Is because what an average trader would do is to be conservative and be aggressive on the same MT5 account. It will not really help your mindset and your psychology. All right, you want to have two separate accounts. So possibly I tell people, so if you want to trade an aggressive account, have a goal in mind. Do you want to buy a car? Do you want to travel out of the country, and then you need capital for something? So your aggressive accounts have a target. How much do you want to make in the shortest period of time? Do you want to make $5,000 or $10,000? Okay, so have that as a target. So you now fund your aggressive accounts with capital that you know that you can afford to lose. Okay, is it $50 or $100 or $200 or more? Okay, money that you know that if you lose it, you won't really feel it, is what you should put in your aggressive account. All right. But for a conservative account, you're trying to grow these accounts steadily. So you choose how much you want to fund with. But your goal is to make anywhere from 3% to like 20% on a monthly basis. So on an account that is conservative, all right, you want to risk on every trade, on each trade, your goal is to risk 1%, between 1% to 5% per trade. Okay, I'm going to explain that shortly. And then your goal, your risk on the aggressive is to risk, okay, 10% to 20% per trade. All right. So let's do quick mathematics. Now, on an account that is conservative, okay, on an account that is conservative, and then you are risking 1% to 5% per trade. Now, that means if you are funding an account with $100, okay, and you are risking 1% per trade, what that means is that if that trade goes against you, if you lose that trade, you will only lose 1% of your account. All right, so 1% of 100 is $1. Okay, so if your risk on that account that's conservative is 1% per trade, if you lose any trade at all, you would only lose $1. So if you are risking 1% per trade, tell me, guys, how many trades will you need to lose consecutively for you to blow that account? Let me see your answer in the chat box. Math students, if you are risking 1% per trade, how many trades will you need to lose consecutively to completely blow your account? Okay, you can type your answer in the chat box. Moses said 100 trades. Basi, 100. Good. We are all correct. All right. Now, let me ask you a very, very honest question. Do you think that someone that has a trading strategy can lose 100 trades consecutively? Is it possible? Type in a yes or no in the chat box. It's not possible. Basi said no. It's not possible, actually. If you have a trading strategy, every trading strategy has a win rate. All right. So you cannot have a trading strategy and then you are losing 100 trades at the same time. Even if village people are following you, at least they also rest from time to time. All right. So there's no way you win 100, you lose 100 at once. So let's even take it to the extreme of the conservative. All right. If you are risking 5% per trade, so 5% of $100 is that's $5, right? So if you are risking 5% per trade and then you lose that trade, you would have only lost $5 on that particular trade. How many trades will you need to lose consecutively in order for you to blow that account? Let me see your response in the chat box. If you are risking 5% per trade, how many trades will you need to lose back to back for you to blow that account? Moses said 20, but said 20. Thank you. Now, let me ask you another honest question. Do you think it's possible to lose 20 trades back to back at the same time if you have a trading strategy? But it said no. Who else thinks no or yes? Moses, what do you think? William said yes, you can lose 20 trades back to back. Tobi said no. Moses said no. All right. So, William, I'll be very, very honest with you. All right. I don't think it's possible to lose 20 trades at the same time, back to back. All right. Because every trading system has a win rate. All right, Jacob said no. Yes, if you have a trading strategy and then you have an edge, there's no way you lose 20 trades back to back. All right, so we now beg the question, why is it that the majority of traders are blowing accounts? Okay, why are traders blowing accounts? That's a question that we must ask ourselves. If they are following, I don't think that people that blow accounts, okay, lose 20 trades consecutively. William said, I just blew an account today. William, so answer this question. Did you lose 20 trades consecutively before you blew your account? Okay, check your history. Did you lose 20 trades consecutively before you blew your account? Right? An average trader that blows accounts takes, let's say, 5 to 10 trades before they blow accounts, or some even take 2. William said no. All right, so possibly the major reason why you blow accounts is because, first of all, you possibly were not taking risk into consideration. Okay, that's a major foundation. Let us forget about greed now. We know that greed is there. We know that there might be an issue with psychology. But on a foundational level, did you have a plan for risk? Were you aware of how much you are going to lose if that trade goes against you? Do you have a plan for losses? Okay, so please, let's start with this concept. Have an account that is conservative, right? You want to risk a maximum of 5% per trade on your conservative account. And then I'll show you how to do all of that in a bit. All right. Now, the second kind of account is the aggressive account. Now, on an aggressive account, you are trying to make quick bucks in the financial markets. And then, of course, you are ready to risk it all when it comes to the aggressive accounts. So, like I said, if you want to do aggressive accounts, put money that you know that, if you lose it, it won't really affect you. Okay, money that when you put it, even if you lose it, you still be very, very okay psychologically. So let's say you are funding your account with $100 aggressive. You want to risk minimum 10% of your account per trade, 10 to 20% per trade. So on an aggressive account, if you are risking 10% per trade, all right, if you're risking 10% per trade and then your capital is $100, if you're risking 10% per trade, that means if you lose that particular trade, you'll be losing $10. So for you to completely blow your account, if you're risking 10% per trade, that means you need to lose 10 trades consecutively, lose 10 trades back to back. All right, which is possible. I will say if you have a trading strategy, the likelihood of you losing 10 out of 10 is about 20 to 30%. It is more unlikely than likely. Okay, and if you are trading aggressive, of course, you need a trading plan. For someone trading aggressively, for example, as soon as you see that you've lost 3 trades consecutively, you want to take a chill pill, relax. Okay, stop trading and then do back testing, refine some things, and then you come back to trading. Possibly you are doing something wrong. That's why you lost 3 trades back to back. All right, if you have a good strategy that has an edge, it is unlikely that you will lose 10 trades consecutively. And obviously on your aggressive accounts, you know that you have to use a very, very high leverage. Okay, you can use 1 to 1,000 or 1 to 500 on your aggressive accounts so that you can have a higher buying power. Okay, now if you are risking 20% per trade, for you to blow your account, you need to lose 5 trades consecutively. Okay, now I need to tell you that it is very, very possible for you to lose 5 trades consecutively in the foreign exchange markets. Okay, it's very, very possible. but you know that this is an aggressive account. So even if you lose that account, you are fine with losses. You are taking just a higher risk. Okay, so when you have both accounts and then you are trading them accordingly, it will help you manage your mindsets and your emotions properly. All right, but you need to know what you are doing. So let's talk about how do you determine the right lot size to use once you know the risk, once you decide on the risk per trade that you want to use. So you yourself have to decide that what is my risk on this account? What's my risk on that other account? Once you decide it, now let's talk about how to determine the lot size to use, right? So we're going to be using a tool called the position size calculator. All right. This is a tool that we're going to use. It's going to help us determine the right lot size that we should be using. All right. So all you have to do is just we're going to go to the browser now. I'm going to share my browser now. And then on the browser, you just search for position size calculator. Hold on, let me share my screen. So you want to go to your web browser or your Google and then search for position size calculator. Right. So once you do that, it's going to bring out a set of results for you, set results. The one usually to be the first one, it's on a website called My FX Book. You can see here. Okay, My FX Book. So just click on it. And then we're going to be taken to a page where you'll be asked some set of questions, right, pertaining to the trade you're about to take. Personally, I want to recommend that before you take any trade at all, you try and do this. Okay, it will really, really help you. So you'll be asked for the currency pair that you want to trade, the account currency, account. So on that currency pair, if you are trading, let's say CAD JPY, come here and type in CAD JPY, select the currency pair that you're about to take entry on. So after you've done your analysis and then you know your entry, you know your stop loss and take profits, you come here to know the lot size that you should use on that particular trade. Remember that on your MT5 platform, there's a place where you'll be asked for your lot size. So when you start putting risk into consideration is when you use this calculator. So it will help you determine the lot size that you should be using. So you'll be asked for your account size. What is your account you are trading? So let's say you're trading $500 account, or let's say your account is $560. Here is risk ratio. So this is where you put your risk in percentage. So just put a value. So let's say this is an account that is conservative. So let's say I'm risking 3% per trade. Now, next question is the stop loss in pips. What is the value of your stop loss in pips? What does this mean? It means the distance from your entry to where your stop loss is. Remember that we measure that in pips, right? Pips is the smallest unit of price that lets you know how far price has traveled. So from where you are taking entry from to where your stop loss is going to be, what is that value in pips? You put it there. Okay, so let's say your stop loss is 5 pips stop loss. You put it there. Trade size, leave it at default, leave it at 1. And then you click on calculate. Once you click on calculate, you see under sizing, it says you should use 0.46 lot. So the lot size you will use on that particular trade to risk 3% of your account is 0.46 lots. So if you lose that trade, you will lose $16.8 US, and that is 3% of $560, right? If your risk is higher, for example, you just come to your risk ratio change it to, let's say, to 5. If you use 5, click on calculate, you can see your lot size has increased to 0.76. So if you lose that trade, you'd have only lost $28. All right. If your risk ratio is 1%, change it to 1% to 1, calculate. That means you use 0.15. If you are trading aggressively, for example, just come here, change, let's say 10%. So for 10%, the lots are now 1.52. Right? When you change any parameters here, the lot size you will use will change. If you change the currency pair, for example, this is CAD JPY, right? CAD JPY is giving us 1.52. If you change the currency to, let's say, AUD CHF, for example, click on calculate. You see it has changed from 1.52 to 1.05. All right. So if you use different currency pairs, it will give you different value. If you are trading Euro USD, okay, you can see it's now 1.12. If your stop loss is higher, let's say your stop loss is now, let's say 20 pips, it's going to change. It's now 0.28. All right. So you just want to impute all of those details according to your trading entry, put it here. And then when you click on calculate, it is going to give you the right lot size. Give me some feedback, guys, in the chat box. Do you understand what I've said so far about calculating lot size using the position size calculator? If you are with me, type in a yes in the chat box. Okay, Joshua Nifoshe, you're welcome. Okay. Yeah, Basi, awesome. Who else understands? Tobi understands. Understandable. Okay, perfect. All right, so let's go forward. Moses is asking more on how to get the value for stop loss pips. So how to get the value of your stop loss will be determined by your trading strategy. All right. So a trading strategy will give you entry and exit points. All right. So it is as your trading strategy provides. That's how you know your stop loss in pips. All right. I hope that answered your question, Moses. All right. So there's no standard stop loss that you should be using. It depends on the pair you are trading, depends on the time frame you are trading, on what your trading system is telling you to do. All right. Every good trading system will give you an entry and exit. And by exit, I mean a stop loss and take profit. All right. Perfect. So let's go back into this. So please, I recommend take a screenshot of this page and put this into perspective. It will really, really help you a whole lot. Okay, so this is the first thing you want to consider when we are talking about risk management. All right, now the next thing that you want to consider when doing risk management is your risk to reward. Okay, your risk to reward. Right? So as a trader, my recommendation is you need to have a risk to reward of at least 1 to 3. What do I mean by risk to reward? I mean the ratio of your risk to the ratio of your profits, of your reward. So it simply means the ratio of your stop loss to the ratio of your take profit, right? The ratio of your stop loss is risk, and then take profit is reward. So what that means is that if you are risking, if you are risking 10 pips, if your stop loss is 10 pips, okay, then your take profit needs to be at least 30 pips. If your stop loss is 5 pips, okay, ensure that your take profit is at least 15 pips. And I'm going to explain why you should do this shortly. All right. When you go on YouTube, for example, one popular thing that you see people saying is that their trading strategy is, 90% win rates. Some even say 100% win rates. What a bold claim. All right. Some will tell you 98%. Some will say 99.9% win rate. And when I see those things, when I started trading Forex 2018, those things really caught my attention. So I was jumping from one system to another because those guys were claiming that their system had good win rates. And I tried out a couple of trading systems, and I arrived at a conclusion that there is no system that is holy grail. All right. And I tell you with all boldness, there is no trading system in the world that is even close to 70%. Maybe the best you see is, let's say, 60, 65% win rate. All right. Because if you have a trading system that is 100% win rate, that means I give you 1 year or 6 months max, you'll be richer than Dangote and even richer than Bill Gates, because the Forex market is a $6 trillion market. All right. If your win rate is 90% win rate, that means you will win 9 out of 10 trades. And with the law of compounding, if you start your capital with, let's say, $1,000, and then you are winning 9 trades out of 10. Okay, someone that is confident that he will win 9 trades out of 10 trades will be very, very aggressive. If I am sure that my system will win 9 times out of 10, I don't have a business with being conservative. I'll be very, very aggressive because it's short for me. So I'll be risking, let's say, 20% per trade. If I'm doing that, I give myself 3 months to 6 months, I'll make at least $10 million in the foreign exchange market, if not more. All right, I give you 6 months to 1 year, you'll be richer than Dangote. All right, so don't get caught up in the excitement that happens on YouTube, on social media, about people telling you that there's a system that is holy grail. It doesn't exist. I have to be very, very factual and honest with you, right? I need to be very, very realistic with you. Okay. Best case scenario, guys. Best case scenario, let's say 70%. Best case scenario. That means you will, if your system is 70% accurate, that means you will win 7 trades out of 10 trades. That means you win 7 trades, you lose 3 trades. Okay. But then there are some, when you start trading, you realize that possibly your win rate is even less than 70%. All right. So let's say an average trader now, even very, very good traders, their win rate is somewhere around 40 to 50%. I'll be very, very real with you, right? Your gurus, your mentors, their win rate is 40 to 50%. So that means if they take 10 trades, possibly they'll win 5 and lose 5. But what will keep you in the game, what will help you maximize your profit, is the risk to reward that you have on each trade. I'm going to explain deeper. Let me just give a backstory to this thing. Even if you have a very, very low win rate, if your win rate is, let's say, 30%, you can have a low win rate of 30% and still be very, very profitable. If you have a low win rate of 30% and then your risk to reward is solid, you will be massively profitable. So it does not. I'm saying this because I want to help you shift your mindset from finding a system that is 100% to focusing on risk to reward. If anything, risk to reward is the holy grail. This is the holy grail. If you can find or optimize your trading strategy to give you at least 1 to 3 risk to reward, you will be very, very profitable. And this is regardless of your win rate. All right. Don't ever find yourself in a situation whereby your risk to reward is 1 to 1. You will not last long in the market. If you are risking 10 pips to make 10 pips, that is bad business. There's no business owner that will risk 50 naira to make 50 naira. That's not business. It's not sustainable. All right. There's no business owner. Dangote will not risk $100 million to make $100 million. Never. He will risk $100 million, okay, to make 10 billion. Okay, take a look at the refinery that is about to start. Okay, billions of dollars from himself and other investors has gone into that particular project. Do you think they are in the project to make back exactly what they invested? No, they are in that project to make back times 100, even for a lifetime. So the least you can do as a Forex trader is to look at this from a business point of view. Minimum you want to risk, you want to have, when it comes to risk reward, is 1 to 3. And then I'll show you that real quick. Okay, so let me stop ranting and then give you a practical example. So if your win rate, let's be very, very realistic here. So if your win rate is 50%, okay, and for many traders out there, their risk to reward is 1 to 1. Okay, so that means they are risking 10 pips to make 10 pips. There are even some people that they will risk 30, their stop loss will be 30 pips, and then their take profits will be 10 pips. Or some wouldn't even let their trade hit their take profits. They will close the trades halfway. Okay, a lot of traders are in this scenario, right? They are willing to give enough room for their stop loss, but they're not willing to give enough room for take profit. Okay, so let's just say a trader is risking 10 pips to make 10 pips. That is a 1 to 1 risk to reward. Okay, so when you take 10 trades, so out of 10 trades, it means you win 5, right? And then you lose 5, right? So the 5 that you win, okay, good. So then your risk per trade, if I'm risking, let's say 3%, right? If each trade, I'm risking 3%. If I win 5 trades, that means on each trade, I won 3%, right? Times 5, that means I've grown my account by 15%. All right? I've grown my account by 15%, and then I lose 5 trades. You've also lost 15%. Okay? That means if your win rate is 50%, and then you have a 1 to 1 risk to reward ratio, at the end of 10 trades or more, you would have just been at a break-even. After spending so many period of time analyzing, having sometimes sleepless nights, right? You still end up at break-even. It's not a good place to be. And for people that are risking 1 to 1, they are not actually able to stick to their determined risk. they start over leveraging because they get anxious. They're trying to make, you know, quick buck in the market. All right, because they have a very, very low risk to reward. All right, they have a very low risk to reward. Give me 1 second, ladies and gentlemen. Okay, now let's say, and for most traders, I have to be very honest with you, most traders don't have a winning rate of 50%. Okay, most have anywhere from 30 to 40% win rate. Okay, so this is a realistic win rate for most traders out there, 40% win rate. All right, so if the win rate is 40%, and then you are risking 3% risk reward of 1-to-1, all right, for this win rate, that means you win 4 trades and then you lose 6 trades. You win 4 trades, you lose 6 trades. Now, if you are risking 3% per trade, the 4 that you won is 4 times 3, which is 12%. And then the 6 you lost, okay, 6 times 3% times 3, that is 18. All right. So at the end of 10 trades, you will be in deficit. 18 minus 6 is 6%. All right. This is the reality for many traders out there. But let me give you a shocker real quickly. But if you have these win rates of 40%, but your risk to reward is 1-to-3, all right, and you are risking 3%. The if you are risking 3% per trade, and then your risk to reward is 1-to-3, that means for each trade that you win, it will be times 3 of your risk. So on this particular scenario now, each trade that I win, I'm going to grow my account by 9% because I'm risking 3%. I'm risking my RR is 1-to-3. So I'm risking 3% to make 9%. All right. So if I win 4 trades, that will be 4 times 9. That is 36%. And the 6 that you lose, okay, you lose each trade 18, is 3% loss per trade. So times 6, 18%. So with a win rate of 40%, but you have a risk to reward of 1-to-3, at the end of 10 trades, you still be in profit of, this will be 18% profit. Isn't that amazing? Even though you are not 100% profitable, but because you have a good risk to reward, right, you'll be able to be in the game, right, much longer. You'll be in profit. And it will also help with your psychology, because if you lose 3 trades consecutively, for example, because you know that your trading strategy can produce 1-to-3 minimum, you know that the one trade that you win, okay, can clear out the losses that you had consecutively, can clear out those 3 losses. You'll be at peace and just wait for your wins to come. All right. So having a good risk reward helps with your mindset, helps with your psychology. It actually helps you follow your plan. Right. Imagine you having a losing streak, and then you lost 3 trades back to back, which is very, very possible. Right? You lost 3 trades back to back, and then your risk to reward is 1-to-1. That means in order to recover your account, you need to win 3 trades at the same time. That puts you under undue pressure. Okay, it puts you under undue pressure. But if you know that your risk to reward is 1 to 3, one trade can clear out 3 losses. All right. I don't know if this particular concepts are making it as clear as possible, but give me feedback in the chat box. If you understand this particular concept, please give me a yes in the chat box. If you don't understand, please type in no in the chat box. Let me know if I'm passing across this message as clearly as possible. Okay, let me know if you understand this concept. Type in yes if you understand. If you don't understand, please type in no in the chat box. So Joshua understands. Thank you for your response. Can I get more responses, please? All right. Bassi said no, doesn't understand. Thank you for being honest. William said yes. Toby said no. Okay, so 50-50 there. All right. Good. So let me just go over it again briefly then. All right. So the major takeout or take away from this lesson is you want to have minimum risk to reward of 1 to 3. Right? You want to optimize your trading strategy to give you minimum 1 to 3. So that means if your stop loss is 10 pips, your take profit should be at least 30 pips. If your stop loss is 5 pips, your take profit should be at least 15 pips. It can be more, minimum 1 to 3. Now, why do you need to have this in place? Because most of the time, you might not have a good win rate, right? You will not have a win rate that is 90%. You will not have a win rate that is 80%. All right? Averagely, on the average, for most traders, for the majority of traders, your win rate is going to be between 40 to 50% win rate. All right? So that you can be profitable. You cannot afford to be risking 10 pips to make 10 pips. You cannot afford to have a risk to reward of 1 to 1. Minimum 1 to 3. So that even if your win rate is 40%, and I give this example, and your risk to reward is 1 to 3, and then you are risking 3% per trade. Even if you won 4, and then you lost more than you won, at the end of the day, because you have a good risk to reward, you will still be in profit. But if your risk to reward is 1 to 1, you'll be in a loss. Okay, so what I'm trying to say is that once you arrive at a trading strategy, you want to optimize your trading strategy to give you at least 1 to 3. So your trading system, if I'm telling you to use a stop loss, and then that stop loss is, let's say, 20 pips from entry, then you must be able to exit that trade at least 60 pips, take profit. It's as simple as that. All right, that is a concept under risk management that a lot of people don't really take into consideration. But when you start putting it into consideration, regardless of your win rate, you'll be fine. Let me give you an example. So let's say your trading system can deliver risk to reward of 1 to 10. That means if you are risking 10 pips, right, that system can make you 100 pips profit. Even if your win rate is 20%, okay, you might still possibly be in profit. Let us check it out real quick. If your win rate is 20%, that means you win 2 trades and then you lose 8 trades. Okay, and let's say your risk per trade is, let's use 1%. 1% per trade. Okay, so if you win 2 trades, remember your risk to reward is 1 to 10. 1 to 10. So 10 times your risk. So if you win 1 trade, based on your risk, that is 1. So that'll be 1 times 10. That's your win. So on each trade that you win, you grow your account by 10%. Times 2, that is 20%. So you would have grown your account by 20% based on your very high win rate. And the 8 trades that you lose, you've lost just 1% per trade. So times 8, that will be 8%. So you've lost 8% minus 8%. So at the end of the day, you will still be in profit of 12%. Okay, that's because you had a very good risk to reward. Okay, you had a very good risk to reward, but your win rate is poor, very, very poor. But as poor as your win rate is, because your risk to reward is solid, you will still be profitable, regardless of the amount of losing streaks that you are having. Okay, let me know if that makes sense. So Tobi and is it Basi? Tobi and Basi, let me know if it's a bit clearer. All right, so you might also need to watch the replay again. It will be available on the YouTube channel tomorrow. As you're watching it again, it will become clearer to you. Okay, so Basi said he understands now. Okay, thanks for your feedback. If you don't understand, just let me know in the chat box. Okay, good. Joseph is a king. You're welcome. All right, so you understand too. Perfect. So once you have these 2 concepts under the bag, you are good to go. Knowing how much you should be, how you should be risking per trade. Is it 1% or 5%? Based on the account types. Like I said, you need 2 types of accounts: an aggressive account and one that is conservative. That will determine your risk. Okay, once you know that, you want to optimize your trading system to give you 1 to 3 risk, at least 1 to 3. That is how you'll be in the game for longer. Okay, so that's how you will not get frustrated. It will help you manage your emotions properly. It will help you with your psychology. Okay, because you understand risk. Am I communicating, guys? All right. So let's talk about the last thing I want to talk about tonight, and then we'll wrap it up, is the concept of psychology. How do you spell psychology? Psychology. Hope I'm correct, guys. So psychology, we're talking about, mindset. We're talking about mindsets. We are talking about, controlling your emotions. We're talking about, following your trade plan. Okay. Because why most of us blow accounts is not because you don't have a working system. It's because you are trading with emotions. You don't have a strong trading mindset. All right, you don't trust me. So when it comes to psychology, it's a lot more about the intangibles that we'll talk about. All right, but one thing that will really help you is to, like we discussed about risk management, know how much you are risking per trade. That will help you a lot. Because one major issue that people face, that traders face, is that they don't wait. So two things: they don't wait for price to get to their take profit before they close a trade. An average trader will, once they are in profit, right, they can't wait for price to get to their take profit. They just close that trade without letting trade go run its course, right? Second one is that once they are in little loss like this, once they're in small loss like this, they have started shaking, they are shivering. And then before the trade even gets to the stop loss, they close that trade in a loss. So you don't let the trade run its course. You are always afraid. You are in your feelings. You are very much in your emotions. You are still trading with emotions. You are not following your trading strategy. No trading plan. All right. But when you start taking risk seriously, and then before you enter a trade, the lot size you have been told to use already told you how much you will lose. Okay, it will help you. So before you enter a trade at all, you want to be very, very comfortable with losing that amount of money. So if you go to that calculator and then you are told that, okay, if this trade goes against you, you are going to lose just $20. So ask yourself, am I fine with losing $20? If the answer is no, then maybe you should reduce your lot size. Reduce it to the amount that even if you lose that trade, you'll be fine losing that kind of money. Now, why do you need to do this? Because when trade starts going against you, because in your mind, you've accepted that, okay, if I lose this particular money, I'm fine. When trade starts going against you, you will not be tempted to close that trade. Right? You'll be tempted to close that trade. On the flip side, most traders do not wait for price to get to their take profit because possibly you are afraid that now that you're in profit, you are afraid that price will reverse and then go back to hit your stop loss. You are afraid. And then my simple response to that is that, do you have a trading strategy? Have you back tested your trading strategy? Has it worked for you? Did you actually practice? Did you practice your trading strategy? How many trades did you practice with? Or how long did you practice? An average trader does not do demo trading properly. An average trader will do demo trading and then they do it for 2 weeks or a month, and then they feel that they are on top of their game. You will never be on top of a game with 1 month of demo trading. It just does not happen because you cannot arrive at a good result for your trading system in just 1 month of trading. All right. So once you know the win rates of your trading system, be fine. Even if you are in profit, okay, your trading system will tell you how you should manage your trade. All right. So once you know how your trading system works and how it delivers, all right, just let the trade run its course. And at every point in time, you do exactly what your trading strategy tells you to do. All right. So the kind of mindsets or the kind of way you want to be trading is to trade like a robot. Garbage in, garbage out. If this, then that. All right. So let me write this down. If this, then that. Okay. So when price moves certain pips in my direction, what should I do? When price does this, what should I do? All of that should be in a trading system. Let's say if price is in 20 pips profit, maybe you take partial profits or you move stop loss to break even. All of that will be in your trading plan. So you want to do your best. So the people that close trades, actually, before hitting his target are people that don't truly have a trading plan, or you don't believe enough in your trading plan. That means you are not convinced that your system works, right? How can you be convinced that your system works? Is with history, practice, right? Is with practice. Now, I'll ask you a question now. Now, we all have a mobile phone here. You know, with every intention that once you load your phone with, let's say, your MTN or your Airtel or your Globacom, you know that if there is money in your phone, you can make a phone call easily. The only reason why you know that call wouldn't go through is maybe if there's a congestion or there's something wrong with the telcos. You are very, very certain that you can make a phone call. Likewise, once you are convinced, and why are you certain that you make a phone call? Because you've done it several times. You know that this thing works. You are very, very certain. That certainty is the same certainty that you should have regarding your trading strategy. Right? So once you are at that level, okay, you have just started trading. It is when you believe in your trading plan, in your trading system, that is when trading truly starts for you. You are now in business. All right. You don't have a business trading a live account if you don't believe in your trading plan. All right. So have a trading plan, know your trading system, and follow it. Trade like a robot. Trade like a robot. Type in robot in the chat box. Type in robot in the chat box. R-O-B-O-T. You want to have the mindset of a robot. Trade like a robot. It will really help you. You need to kill your emotions when it comes to trading. You cannot trade without emotions. So you have to train yourself not to have any feelings when it comes to trading. Just do exactly what your trading system says you should do. That's all you need to do. Okay, trade your plan. Trade your plan. Okay, that is all you need to do. Trade your plan. Forget about emotions. Forget about the money. Your plan. Follow your trading plan and you'll be fine. Okay, so I guess that is the missing link for most people. Psychology is and you will not get there one day. It's a process. So be very, very flexible with yourself. There's some people that it might take you 3 months to 6 months to really get to a point that your mindset is now very, very solid. All right. So don't get mad at yourself if when you open a trade, you are still thinking about the losses. It's fine. Gradually, you will outgrow it. And then you start thinking about your plan. You start following your plan. All right. Moses, thank you. Joshua, thank you. Joseph, thank you for your response. All right. Yeah. All right. So psychology, once you combine psychology with risk management, guys, trust me, you are going to be formidable in this Forex trading business. Okay, have a very, very strong mindset. Don't trade without emotions, and follow your trade plan. Have a plan. If this, then that. If you lose 3 trades in a row, what should you do? You want to close your laptop that particular day and go back to analysis. You want to build back your confidence. Okay, take some few demo trades, and then you are fine. That's what you want to do. If this, then have a set of rules that you follow at every point in time. If you are in a loss, if trade is in a loss, you're in floating loss, what will you do? If your trade is in profit, what would you do? So all of those things is what you have in your trade plan. And once you put it in your trade plan, just follow the damn trade plan. And then you totally handle psychology. Okay, you want to be very, very disciplined. That is when you know if you are disciplined or not. Okay, following your trade plan. If your trade plan says you should do A, do that A to the letter. Don't do something else. Right? And thankfully, you are the one that will create your trade plan by yourself. So be disciplined enough to do exactly what you set out to do. All right. Like I said, it's not going to be easy. Discipline is not a day's job. Okay, it's a result of consistent effort. All right. Do we have any questions so far? Babs, William, Jacob, Joseph, Moses, Joshua, Tobi. Any questions so far about risk management and about psychology? Any questions so far? Any questions so far? You can type your questions, or if you want me to unmute you, I can unmute you, and then you ask your questions verbally. Joshua said no questions. Okay. So while I'm waiting for your possible questions, Jacob said no questions. So for everybody here, this is a beginner's class. Like I always say, you want to create a demo account normally, and then you also want to create a live account. Just the way, when you go to a driving school, before they give you your driver's license, they need you to drive the real car. Okay, once you drive the real car, that is only when, and then you pass, that's when they'll give you a license. Likewise, you might not be able to properly get a hang of psychology if you are not trading a live account. So demo accounts is good, but live accounts will really help you learn a whole lot when it comes to psychology. So even if you're a beginner, you want to fund at least $10 or $20 or $50, and you also want to trade on that live account. Okay, that will help you manage your emotions properly. It will help you follow your trade plan, because now real money is at stake. Can you follow your plan when real money is at stake? All right, so I'll be giving people that will make a deposit with 10 trade an offer here. All right, an offer for everybody here listening to me, right? For everybody that makes a deposit of $100 into your 10 trade account, I'm going to give everybody 1 month access to my Forex Trading Academy, where you learn so much more about Forex, about entry strategy, about a whole lot. Okay, normally access to my academy is $100 that you pay to me every month. But as a client of 10 Trade, and then you are in this class, to access that academy, you only need to make a deposit into your own trading account of just $100. Once you do that, reach out to your account officer, okay, and then they will let me know that you do. And then I'll get your email address, and then I'll add you to the academy. The second offer is if you make a deposit of $200 and above. I'm going to give you access to the academy and access to a one-on-one session with me. Okay, so it will be a Zoom session, a Zoom one-on-one session with me. Okay, so that way I can teach you more things, answer your questions properly, and take you by the hand. So 2 offers that I've given you for beginners in this class. You want to make a deposit into your trading account. Your 10 trade account is only for 10 trade clients. Make a deposit of $100. Once you do that, reach out to your account officer. I'm going to give you access to my trading academy. It contains over 15 hours of massive educational content that will help you have a solid understanding of the Forex market. If you, for the second offer, make a deposit of at least $200 into your central account, and you have a 1-month access to my academy, you would also get one-on-one coaching session with me. How about that? Okay, does that make sense to you guys? Let me know if that makes sense. Type in a yes in the chat box if that's a good offer. Okay, William saying, how can we reach you if we do that? Okay, let me just, okay, I'll drop my number on the chat box. All right, so once you do that, you can just reach out to me on my WhatsApp. Okay, so that's my WhatsApp number. Okay, reach out to me with proof that you've made your deposit, and then I'll take it from there. Okay. Moses said makes sense. Joshua said yes. Perfect. All right, so do that, and I'll be expecting to show you more things. Now, the Forex market is very, very beautiful once you have a solid perspective of the markets. It's all about perspective. It's all about perspective. All right. So I'm looking forward to taking for you guys to take advantage of that. My number is in the chat box. You can send me a message on WhatsApp, and then I'm going to attend to you. All right. Any questions, guys, before call this a night? We've had an amazing last 4 days we've been here together. I want to thank you guys for showing up for these 4 days, for being here to the last day. If you missed any session at all, feel free to watch the replay. The replay is on our YouTube channel, or reach out to your account officer to send you the access to the link to the YouTube channel. You see all the videos for day 1, day 2, day 3, day 4. Watch everything again and take action. Take action. Take action. All right. So this bootcamp is brought to you by 10 Trade, our broker of choice. So we say thank you once again. All right. If you have any questions, feel free to reach out to your account officer. Okay, and then we'll furnish you with all the answers that you need. All right. Till then, let's say our goodbyes now. If we don't have any questions. All right. Also, 10 Trade organizes live trading sessions on a daily basis from next week, every single day. Join those live sessions. You'll be learning some advanced techniques that will help you grow a lot faster, and it's free. 10 Trade is not telling you to pay anything to access this session. It's free. So join the session, learn, update your knowledge, improve. And then eventually you understand what's going on in the market. All right, let's have a remarkable weekend. I want to wish everybody here all the very best in our trading journey. All right, I'll see you on another webinar. Good night, everybody. God bless you.